This is David from Trade Informer, and this week we have something a bit different because we're doing our first actually online video interview. And to do that, we have Illimar Mattus. I think Illimar will probably be familiar to a lot of you. He's the founder of Tickmill. He's also the founder of the Trading Pit, and he's also an investor in lots of different companies, which is, I guess, something we'll get to in the course of the discussion. So maybe to kick things off, Illimar, something I always like to do is just get a bit of background on people, like how they kind of got into the industry, all that kind of thing. So, you control a lot of companies today, but Tickmill was the one that you first kind of set up, is my understanding. Can you talk a bit about like how that happened, your own background, how you ended up setting up the company, that sort of journey, if you like?
First of all, David, pleasure to be here and be presenting or sharing my thoughts also to your community. So my journey actually started more than 25 years ago when I was still in the high school, and when I first saw the movie Wall Street, and I was like 15 or 16 years old, and seeing Gordon Gekko, so Michael Douglas, in this big room, and all these flashy like ticker tapes and this phone ringing and that. So I was like 15, and I knew that I want to be part of that world because it was just so different to the place where I'm from. So I'm originally from a small village in Estonia, which has 3,000 inhabitants, one small shop, and surrounded by potato fields and all sorts of stuff. So I got really big impact from that, and I started studying finance. So a lot of my friends during the high school, they were going out and having fun. I was reading economics books, financial analysis books. Also, I was a subscriber to a local daily, this business newspaper, and there were only two subscribers in our village. Like one was myself through my mother, and then the other was the owner of the local shop. And so from the university, I started working in the private equity firm because I knew all this financial analysis and all of this stuff. When I actually finished the high school, so I entered first the trading world. I started sort of practicing with stocks, and so it was like a journey from early practice from the high school times, university, then moving into the private equity business. And throughout these 6-7 years, as I was working in this private equity business, I was trading together with my brother Ingmar as well, who had some other projects then. And then eventually, sometime in 2010, we came to the conclusion that why not switch the side, because we had been at that time trading already more than 10 years. Why not switch the side and actually try the brokerage business? Because by that time we had been clients of majority of the largest brokers in the world, primarily futures and futures options brokers. So like Lind Waldock, MF Global when it was still around, ADM, Interactive Brokers, of course, and we kind of switched side from the trading to the brokerage business. And this is how Tickmill really started, and yeah.
Yeah. I think it's something that I always find interesting is I think there's some assumption a lot of the time is that people in this industry are almost like just marketing people or something like that. But actually, a lot of the time, people are traders and then kind of make the sort of switch that you said. But one point I'm interested in, and I don't know if you can have any thoughts on this, is so you mentioned that you're from Estonia. I think if you look at the sort of what I guess you could broadly define as the European tech or fintech ecosystem. And Estonia is a pretty small country. I mean, I can't remember what the population is, but it punches way above its weight. I mean, you have Wise and I think Bolt and Skype, I think, was also Estonian. You have another company, I think, called Lightyear, which is sort of in the stockbroking space. So, how come I mean, and then obviously you guys as well. So like, what do you think is what's happening in Estonia that is making it sort of like a hotspot in this way? Because
So
it's actually kind of, yeah.
I think there is like a historic background as well. So, for example, which a lot of people don't talk about it, but so when the Soviet Union collapsed and Estonia became independent, then what happened? Because our like location next to Sweden and Finland, so our neighbors actually helped us to kickstart the economy. So what it meant was that, for example, when the banks were born in the early 90s, they were built from scratch, from the new with the new technologies that were present there. So, which meant that because the old stuff we had to throw all away, like from banking, finance, like government operations, medical systems, everything we had to throw out because it was all on paper. Then we kind of embraced technology and we got the newest at that time state-of-the-art technology to the country because also the Swedes, Finns, they were helping us, even like there were grants and so there was like a huge technology development. And from that perspective, younger generation got access to this technology and they were probably more advanced in that aspect compared to their like peers in other countries. And hence, a lot of this technology started to develop and today, yes, you're right, it's like even in the brokerage space, interactive brokers, for example, it's not very well known, but they have had their core technology development center in Estonia for almost 20 years now.
Wow, I didn't know that actually.
So the
That's
core
really interesting.
development of the core infrastructure and the platform development of interactive brokers is done primarily in Estonia.
Wow.
And nobody, even a lot of people in Estonia don't know this, but they have like I think 500 or 1,000 people working there.
Wow. That's interesting. I didn't know that. Okay, so maybe to take a slightly different turn. So one of the things I've been doing this now for like a couple of years, and it seems like a lot of the time I'm interviewing people, and then it turns out that you are somehow like involved, or you're an investor, or something like this, and that is primarily, I think, through I don't know, would you call it a VC or a private equity company? I think it's called Pinorena Capital, and you've sort of made quite a few investments in various companies. So like Dominex, I think, is one. Change, which is also a kind of broker, is another one.
Change is actually my brother, so they sometimes like we make different
Okay.
investments, and sometimes they kind of attribute some investment of my brother to me and vice versa. Like so that's funny actually. Yeah.
Okay, so maybe not that one, but you like, so do you run Are you part of Pinorena Capital, or is that your brother?
So Pinorena is like so effectively it's like my family office where I invest funds that primarily I have earned over the years through Tickmill, so as shareholder there through dividends and also through like trading and investment activities. And this is like my return to the private equity business where I actually started my career like 20 something years ago. Whereas we make investments primarily in financial technology companies. We have brokers, banks, insurance companies, neobanks, and all sorts of like interesting stuff there. Yeah. So it's based in Estonia, but we are doing investments global. So we have companies in portfolio from Europe to North America and to Asia as well.
Yeah. And so, can you talk a bit at all about like what you look for when you're making an investment? I've spoken actually this week to like a couple of people who are sort of like in the early stage of fundraising, and I think it's one of these topics that has kind of become a bit like cliched because I see so many people posting about it and stuff on LinkedIn, but it is interesting, right? Like if you are someone looking to take a stake in a company. Like what kind of traits are you looking for, and would you guys make an investment with a view to being like a majority shareholder kind of thing, or is it more like VC style, where you take, I don't know, 25% or less than that, and you kind of advise, but you let the people who started the business run things?
So originally, like the perspective has changed a bit. So originally, I kind of set up this firm with an aim to build, to invest into like complementary businesses to Tickmill. So let's say Tickmill is primarily a brokerage firm. So I was looking like into the asset management, which is like Darwinex, for example, that you mentioned, indexing, C8. Some other brokerage firms that are like complementing to the service of what Tickmill is offering, and I was kind of having this broad view that if eventually I have covered the full chain, like from the early stage of being a trader to ultimately like asset management, and to the extent even institutional asset management, because I have in portfolio also like direct indexing technology company, which is primarily institutional business. And that's like the aim, like to build a portfolio of companies that sort of capture the full, let's say, world of financial industry, like from brokers to banks to insurance to asset management, and then build like competence, and also share our competence with the portfolio companies. So long story short, primarily we are looking into like financial industry, more technology focused financial industry companies that can materially change or improve the services that are provided in like this specific segment or industry, and that's what we are primarily looking. We do like early stage, very early stage. So the smallest like capital allocation we've had is quarter million, but the largest we've done is like up to 15 million per company. So it like varies, and yeah, so that's our approach.
Yeah. I mean, maybe final question on this before we move on to talking about the trading pit and that kind of stuff is, like, you seem to have your finger in so many different pies. Yeah, I often look at someone. I don't want to say that you're the same as him, but I often look at, say, like Elon Musk, and I go, okay, he's managing Twitter, he's managing Tesla, he's managing SpaceX, whatever. I'm just like, how does he find the time? I feel like I can barely find the time to do the, like one and a half jobs. So I'm curious how you sort of like. I mean, if I look at, say, Tickmill, right? Tickmill is now a huge company. So just running Tickmill must be really time consuming. How do you kind of keep on top of everything? Like, I mean, you have to manage Tickmill, you have to manage the trading pit, you have to then, if you have these investments, presumably you're also having to sort of keep abreast of what's going on with them as well.
So it's been like a process of evolution to me as well. So if I go back, for example, to the early days of Tickmill, then you might be really surprised in your audience. But when we started in 2010, the first year we were actually we were answering the live chat. So clients that joined, they were pressing the button, start live chat. On the other side of there was actually myself, my brother Ingmar, or the third co-founder Nikolai of Tickmill. And then we were like, for years we were so hands-on. I literally knew like I don't know what coffee we have in the kitchen, and like to the smallest details we kind of knew. And then as the business was growing, like we started delegating a lot of stuff. So my approach is really to find let's say core individuals that have the capability to run teams and companies and projects, and to delegate to them as much as possible, and also trust their judgment. I
Yeah.
mean, oftentimes decisions are not maybe the perfect ones, but it's important to make decisions. So I always try to delegate as much stuff as possible. So that's really the solution. But I still work like 8-9 hours a day. Majority of my time for the last few years, logically, goes to Tickmill and also the trading bit. So these are, let's say, my core time consumers on a daily basis, and then the third one, Pinorena, it's more, let's say, passive because we make investments into companies where they already have teams in place which are properly run, and
Yeah.
we participate mostly on the board meetings and just some like ad hoc stuff, but it's not so much, you know.
Yeah. Is it I'm curious. Is it difficult to make that sort of change? Like, if you are used to, being very hands-on and literally knowing all of the sort of finite operational details, to switch to allowing, and I would imagine this is even more pronounced, right? Like, if you set up a company, you kind of see it almost like it's like your baby kind of thing, and so it's almost like not only are you really familiar with all the details, but it's like you feel like you created this thing. It must be quite difficult to hand over to someone else or to trust someone to sort of manage this thing that you feel like you've created.
It is very difficult because you kind of somewhat lose touch with the business as well. So, for example, like in the first year when we were in live chat ourselves, you know, and also, by the way, we had 24/5 live chat. So I had a laptop next to my bed. And when some dudes from Asia were like calling us, then I picked up the live chat, or my brother, or the other co-founder. And so it's been difficult because the moment you start giving away stuff, you somewhat lose control and a lot of information as well. But I kind of adjusted myself also, like mentally, in that sense that I try to understand just the high level, like how things are working, and what are the like key decisions that we need to make. What are the KPIs, core KPIs that I need to focus, and then if I look at like any specific company, then I know that okay, in this company the core KPIs and the aspects that I need to look after are these, let's say, five topics, you know. And then for every company, I have this. And then in Tickmill and the trading bit, I go like more deeper. So I have to divide my day between the Tickmill and the trading bit and prioritize this. So like prioritization is like one of the biggest, let's say, tasks that I have every day. Yeah. But
Yeah,
it's difficult. It's
interesting.
difficult. It's difficult.
Yeah, I can imagine. Okay, so actually, on the topic of a trading pit, I mean, Um, what I'm finding with the kind of people that read my newsletter or go on my site is there seems to be this split where like some people just have no idea what a company like the Trading Pit does. It's which I find kind of funny because I would assume it would be impacting their marketing budget and all that kind of stuff. And then you have other people that seem kind of more and more aware of it, but perhaps for someone that is like just not really familiar with what you're doing, can you talk about what the Trading Pit is, what it does?
So the idea originally came from the fact that there are like literally hundreds of thousands of good traders out there globally, if you take the global level in all different asset classes. And a lot of these guys, if not all of these guys, have this aspiration that if they trade well, they perform well, they have the profitability, the consistency, etc. Then eventually they would like to get access to more capital because this way they actually increase their income at the end of the day as well. And they are really struggling because let's say if there's a guy from I mean, let's say from my village with 30,000 people, there's one guy who's super good trader. If he wants to attract capital today to his strategy, it's almost impossible because nobody knows him. He doesn't even know which stores he should knock on, he should talk to. Even if he gets through to somebody, chances are that nobody will actually listen to him because he's from Estonia, from a small village. Who cares, you know? And so at the trading bit, we try to provide service and let's say a door to enter the financial and asset management world for these talented traders. And how we do it is that we evaluate the effectiveness, the success of their strategy by pushing them through the evaluation this process. So they buy various challenges, and the objective of these challenges is primarily for us to be able to determine if this specific trader is a good trader. And if they are a good trader, then obviously we start investing money into these strategies by picking, signals from these traders, and making profits from this. And
Yeah.
the difficulty is that because we are capturing tens of thousands of traders every month, then the risk management is super difficult.
Yeah, that's something I'd like to talk about in a bit. I just have a couple of other sort of like technical questions. So, I mean, one is actually like, is there a sort of average person that comes to a company like yours and then passes? So if I think about sort of this industry as a whole, right? Yeah, I think people can kind of get lost in the concept of trading, right? So it ends up being kind of like a vague concept. Whereas if you actually look at, say, I don't know, like a macro fund or a hedge fund or whatever you want to call it, right? There's lots of different strategies. There's lots of ways people, you know, trade the financial markets and make money. So if I think of like a few years ago, there was this big trend of people would, invest at a SPAC at IPO, and then they would like do a kind of arbitrage where they would just redeem the shares and keep the warrant, and if the warrant was valuable, they'd make money. And you see what I mean? There's like a lot of different strategies. Some of them would not just logistically be possible with a company like the trading, right? And so, is the average person that comes to you and let's say they're good at what they do, this is kind of like a CTA managed futures style thing, or is it like what is it? Is there like a normal person who's good, or is it really just completely varied and like you have completely different strategies and things like that?
It's a really good question. So there are like various levels of like let's say the trading talent and the experience. So for example, the challenges that we have they're primarily meant to anybody from the street who comes in, who is interested in the trading world, who has taken some courses outside from external parties or inside using some of our educators, and they think that they are already there, that they want to try trading the markets and see how they go. So let's say like 90% of the client base is like this, that the ordinary guys from Kuala Lumpur to Sao Paulo who just want to try and want to get access to more capital. Then there is like a 10% guys that have already like let's say 1 to 5 years of experience in trading. They've had some successes already, and but we need to mold them a bit because oftentimes still these guys are far from proper risk management. By pushing them through the challenges, we kind of help them to change their mindset in terms of like how to manage the risk and sort of refine the way that they deal with risk. And then from this 10%, we kind of hope to nurture this the rock stars of trading from whom eventually we would be able to create like let's say portfolios under some regulated fund structures to be able to sell also to external investors. And then there is a third group. Then there's a third group that are already semi-professional, if not professional traders or even smaller hedge funds. They come to us and say that, hey, I've traded 7 years with interactive brokers. I have this track record. I've talked to this fund, that fund. Nobody wants to invest into us. Can you have a look and tell us if you can invest? And in that case, we are not telling them that, hey, you have to buy this challenge and prove yourself. We take their track record. We analyze this with our risk team, and oftentimes we invest directly into these traders. So, for example, the owner of the trading pit, Pinorena, has also invested directly into some of these strategies. So I've signed like agreements with some of the like very good traders, allocated capital for them, and then they are trading on behalf of Pinorena Capital. So there are like these various levels, and we hope to capture the whole universe and all of the traders segmenting them properly and giving them the right product that is like catered for them.
Yeah. Yeah, it's super interesting. So I have a couple of follow-up questions on that. So one is like you sort of mentioned the risk management facet of this, and in some ways, I think the structure of a firm like a trading pick kind of is like I think it almost resembles like I don't know if you know 20 years ago you had futures arcades that were quite popular in the UK where you would pay to take a kind of course or something, and if they thought that you were good, you would get a desk, and a lot of the time you'd have to pay a certain fee to have a desk, and basically you'd do kind of like a profit share. But more recently, right, you have this trend in it seems to be more like macro funds where you have I think it's called like pods, you know, and so it's almost like there's a company structured, and then they will give like a team of it can sometimes be like one guy, and they'll just go, okay, you are trading your strategy, and then it's kind of like a top line fund structure, and then lots of people doing their own thing. And I've heard that to manage the risk exposure on that can also be challenging because it's almost like you have everyone operating in a silo, and you can kind of lose track of what your actual exposure is. So how do you guys actually structure that, right? Like if you have I don't know 1,000 people who pass a challenge and they get through, and they're all trading. I don't know. They might be trading completely different things and netting each other off, right? But then if you're having to trade that, then you're just flat. So if one of them makes money, then presumably they're not actually making money. Like I just find that kind of interesting. I don't really understand how people are doing it because it seems quite different to running a broker where it's sort of like managing flow and all that kind of stuff.
So it's like a game of probabilities and what we are doing here. So for example, our clients, whenever they're trading, they're always on the demo accounts. So we never give them access, like they never have like an account where we have real live money. They always trade on the demo account. And then what our risk team does is that they start picking the trades from the top guys selectively. So, for example, one guy might be overall, let's say, a good trader, but his best trades are in dollar yen, and we pick the dollar yen from this portfolio. Another guy is trading, let's say, major crosses, but he trades also gold, and he's actually most successful in gold, and we pick the gold trades. And then we, based on our discretion, we kind of decided, okay, whether we kind of copy the signals, the specific signals one to one, or we expand the exposure and even send like 10 times the size to the market. So that's what's happening on our side, and it's super difficult. It's super difficult, and this is also the reason why in some kind of broadcast I've said is that you need to come from the brokerage industry to properly build this business, because a lot of the prop firms that are out there, you know, they have been set up by some marketing guys from Dubai or wherever, you know, that have no real understanding of risk, you know, and it's the most difficult part of this business. But saying this, I can also share, and I think it's no secret at all that a lot of the a lot of the people, like in any part of trading, like they are not successful, and which in that sense makes our life easier. That through the evaluation process, when we have these challenges, we are able to, let's say, filter out quite well the guys who have like good potential.
Yeah, no, absolutely. I mean, just thinking of like on that point. I mean, is there ever a risk that someone just basically like I'm assuming right if you're successful as a business and you get lots of people coming to you, there's just mathematically a good chance that 0.1% of those people are gonna somehow get lucky and get through, and then you have a kind of risk where it's like, well, is this person actually good, or did they just kind of place some trades and they kind of lucked out, right? And just statistically, because of you have so many people, that can happen. Um, is that sort of what the challenge process is set up to do, to kind of get rid of those kinds of people? And does it
So,
work?
so the challenge like process is like the first let's say layer of filtering, whereas we kind of see already, and it's done automatically. So we see already which guys have like no potential at all, and which guys have at least some potential. And then when they go through the challenge and we actually put them on a scaling plan, then in the scaling plan as well, they can scale up to larger, let's say, risk base over time. So they are not able to like come out from the challenge and then jump immediately to having exposure of up to like 5 million. It's not possible. So we are scaling them, and the interesting thing, is that oftentimes it happens that those who actually pass the challenges, uh, from the pure fact that they have passed the challenge, they develop this kind of perception that now they are already the best traders in the world. And then what happens is that and then when it happens is that when they actually go to the first level of the scaling plan, they become reckless because they think that they know more than others, and they think they are better than the markets. So which means that a lot of people fall out on the first level of the scaling plan because something like in the psychology has changed. And
Yeah,
then when they pass the first level of scaling plan to the second level, then we have already more confidence. Okay, this guy has something.
yeah,
And so the higher they go on the scaling plan, the higher is our confidence to copy the signals, and maybe even to expand the exposure when we copy the signals.
yeah. So something else I'm curious about is like if you look at like broadly looking at say Darwin X, because if you go on Darwin X, you can look at you can get a rough sense of the portfolio or the strategy that someone is running because there's like a breakdown of what they're trading in. So I don't think you have the same thing with you guys, but like um, when you look at those strategies, a lot of them to me seem like it's a kind of managed futures style strategy. And if you're trading managed futures, I think the risk there's often basically a cap on how big you can get, which is like one of the downsides of that strategy. And I think my understanding is if you're trading OTC, that can happen quite quickly. So is there sort of like a downside to this in terms of if you think about, let's say, the asset management industry, if you're running just like a long equity fund, size is a problem, but you can get quite big until size is a problem, depending on what you're investing in, right? If you're a small cap manager, that can happen more quickly than if you're like investing in mega cap US stocks. But if you're running a kind of managed futures fund like this and you're trading OTC, do you see a point where it's like, okay, this person, we can allocate this person, I don't know, 10 million or something. I don't know if you would actually do that, but like hypothetically, let's say 10 million, and actually that already is kind of like hitting the limit where they can't really trade a larger size than that without slippage and just killing the strategy.
I think you just highlighted like really really good point. So that's exactly one of the core problems with FX CFDs and in general OTC products is that when they get to certain size, and for example, if you mentioned Darwinex, so Darwinex has primarily FX and CFD strategies, so there is like a scale limit there. And some of these strategies, which are actually good strategies, underlying strategies, pretty good. They have actually reached this kind of limit. And from which point on, you can't actually scale it anymore. You can try moving into the futures, but some of these like good strategies also on the side of the trading bit, they are primarily like let's say exotic FX, and you can't scale it. Like in no way you can scale it. And that's also like the reason why we, for example, don't allow this like full scale this copying that yesterday I was having a call with one this training academy in South America, and he asked me that, hey Illimar, can I bring you this 1,000 guys from my academy and give them all the same EA to trade FX? And then I asked him, okay, so imagine all of these 1,000 guys have 100,000 on their account, and they all enter the market at the same time, exactly the same millisecond. So you have 100 million of underlying equity, plus you leverage this, let's say you have a 3 billion dollar maximum exposure, and this $3 billion with one click is entering the market.
Yeah, it's not going to work. Yeah.
And it's like, and by the way, I use this also to explain to the guys why we are not allowing this copy trading, because we are looking for like real solid traders, like that we can invest real capital into them, put them under fund umbrellas, etc. So if a guy comes in, with some signal that he copies from his neighbor, then actually the talent doesn't belong to this guy. The talent is with the guy that is his neighbor. So we are more interested in his neighbor.
Yeah.
And,
So one of the other things though is you do offer. You're like one of the few, at least in Europe, who has futures, right? You also have futures, so it's not just CFDs. So is that like and it actually in general is one more popular than the other? Because like anecdotally, I would say that I see a kind of rise in interest for listed derivatives, at least in the UK. I don't know, and I would assume that you kind of maybe see a similar trend in Europe. So, is the appetite for futures on the same level as it is for the CFD, or is it like less, or what's happening there?
it depends on geography. So we started at the trading bit primarily from Europe, so the German-speaking region, Italy and Spain, and in this kind of geographic space, there are a lot of like futures traders. So if you ask me right now, today, on 11th of April 2024, I can tell you that more than 50% of our clients are actually trading real futures. So FX CFDs is less than, I think last month we had less than 45% was FX CFDs. But at the same time, like if you go towards Asia, let's say you take Malaysia, Indonesia, Vietnam, then they don't have this historic, let's say, experience with futures, so they are primarily trading with FX CFDs. So as we are growing globally and as we are expanding more outside of the Europe, then I think the FX CFD share will probably rise up to a certain moment, and then once sometime in this year we will also launch cash equities, so real stocks. I think that will come with an avalanche, and that will become actually the biggest kind of the asset class for our community within like the next 2 years. But surprisingly, yes, today futures is more than 50% of the total business that we have.
Interesting. And yeah, maybe to finish off, I think if you look at the past, I mean, let's just say since the start of this year, like Q1 of this year for this industry has been kind of crazy because you had, a lot of companies were pulling out of have already pulled out of the US. My sense is that it's a terrible idea to go to US. I don't know if you if you agree with that, but it just seems like very murky. And then you also have obviously this whole thing with one of the big meta quotes, one of the big trading platforms, kind of seemingly not being that happy about how some people are structuring their businesses for this particular industry. So, and then from my own point of view, and you kind of mentioned this when you said that a lot of people are like just marketing guys who don't really know what they're doing. I really see that a lot, and yeah, it's I would not be surprised if you saw more people kind of blow up just because, like, if you don't know what you're doing, that kind of tends to happen in this sort of industry. So, I mean, like, if we think of the rest of the year, where do you think things are headed? Do you think there will be regulation? Do you think it's going to kind of become a bit more professional than it might be at the moment? And like, also, are you seeing sort of price pressure? Because I mean, there's so many people that I see starting this. It feels like it's becoming more and more competitive. So, like, how do you stand out? I guess in that kind of environment. I appreciate it's a lot of questions, but
I think, but all are good questions. So we started from North America. So we offer real futures in North America, and actually over the next month we're gonna also make it public. So we are going to partner with one of the largest futures brokers in North America, using also their platform. So and that will kind of bring a lot of let's say credibility and yeah, reliability to this space as well. So we are one of the very few prop firms, like you said, that offers real futures as well. We are not kind of staying away from the US in the futures, because we partner with like solid companies there. But I mean, if I look at the industry in general, I think regulation will come in within the next 2 years, 2, 3 years. And the primary reason why the regulators come into this space is that, like what we've discussed with you today as well, is that there are a lot of like these prop firms set up by people and managed by people, but who don't have the faintest idea what they are actually doing. They just heard from their like neighbor that this business is kind of interesting, and somebody somewhere made some money there, and hence they are starting up this business. So there will be regulation. There will be probably over the next 5 years huge consolidation. So there will be, I think, 15, 20 firms globally who will pick up 90, 95% of this business, and we already know who they are, like together with us. So most of them, they are already there. And but how we stand out today is so as I said, we have real futures. We have this huge brokerage background and the risk management background as well, which actually puts us in the forefront from that sense that the clients should feel safe dealing with us uh, from any aspect of the world, and it adds a lot of credibility. That, for example, if I take our group CEO Daniela, she's been 20 years managing regulated brokerage firms. If I look myself, then I am actually sitting on the boards of pretty much all of the Tickmill regulated entities. So we have a huge reputation that we need to protect here, which means that the way that we run the trading bit must be in accordance in order with all the like expectations from the regulator outside of the prop trading industry as well, because I cannot like operate in a way in trading bit that would harm my other businesses elsewhere. So we have to run it in a very like solid way. And this then brings us to a very like important way how we diversify, is that we have like full transparency. Anybody who joins us, they understand who we are, what's our background, and they feel safe dealing with us. And it's not only the clients, it's like our partners, our affiliates, anybody really there. So they see who we are, what we have done before, and they kind of feel that probably they have higher probability of success with us.
yeah. Okay, well, I've taken a lot of your time. Maybe to finish off, one area that I think a lot of people listening or watching this would be interested in is actually more the Tickmill side of things, because it's like a lot of brokers and executives at brokers are kind of go to my site. So, is there any kind of new or interesting things happening there? Like, you're actually one of the few people in the UK who offers options, I think. So that's kind of cool. But any other interesting plans there on the horizon?
So we are going like fully multi-asset. That's our kind of strategy for the next 1, 2 years. We are going to launch our own platform. So that's almost any day now going to be launched. First we launched it to a soft launch. We're going to expand also our licensing kind of footprint. So we are looking in some places in South America as well. We have been looking also in North America, but I think it's a bit far away still. I think a few years away. We have today roughly 300 people in Tickmill, so it's like a solid organization. We're constantly adding new instruments, and I think, yeah, these are like the core aspects. So decent regulation, very good product offering, very good platform offering as well, very good cost levels as well, and the trading cost for the end clients, which is something that we are really well known in the industry. And I think most importantly, the consistency in what we are doing there. So I was just like few months ago in Dubai at one expo, and I asked our clients, like long-term clients, why they are trading with Tickmill, and pretty much all they say the same things, just using different words, that they like in Tickmill that you can get a consistently good service from Tickmill. It doesn't change like from 2015 to 2020. It's like consistently good, and it's a reliable service. So yeah.
All right. Well, that's a good way to finish. So remember that, everyone. Be consistent. So, Illimar, thanks very much for doing this, and hopefully we
Thank
can
you.
chat again in the future.
Thank you.
Cheers.